Most new mortgage brokers assume surviving the first year is about effort. They're going to work harder, take every case, and say yes to everything. But that approach usually does the complete opposite. Okay, the first year isn't about surviving through intensity. It's survived actually through resistance, structure, and also realistic expectations. So let's get really clear on what we're going to unpack in this video. We're going to be looking at what actually makes the first year survivable as a mortgage broker, why overworking often backfires very quick, and what keeps new mortgage brokers in the industry long enough to actually stabilize. So what makes the first year so difficult? Your first year carries pressure without any real momentum. You're responsible before you're actually confident. Most new mortgage brokers experience inconsistent income, long lead times before payments, steep learning curves with real, very real, in fact, consequences, and emotional weight from client responsibility. Nothing feels settled yet, okay? And that uncertainty is what wears people down. So then why does working harder often make things even worse? You see, many new mortgage brokers respond to pressure by doing more. They're going to do more cases, more hours, more stress. But the volume without structure, it's just going to create fragility, and that's going to make mistakes increase. It's going to make confidence drop. It's going to make admin pile up, and income becomes very unpredictable in an already unpredictable place, because busy isn't the same as stable. In the first year, stability matters way, way more. So then what actually keeps a new mortgage broker afloat during this time? Well, survival in year one comes from control, not speed. New mortgage brokers who last, they usually limit their case numbers intentionally. They actually decide to do that. They follow systems closely even when it feels slow. They accept supervision without resistance, and they focus on accuracy way before they focus on trying to be confident. See, they don't try to prove themselves early. They become reliable. So then why does structure matter so much more than motivation, especially in these early stages? You see, motivation is going to fluctuate, but structure does not. So when processes are clear, decisions feel lighter, errors reduce, progress becomes predictable, and confidence grows naturally. Most burnout isn't caused by workload, it's caused because uncertainty and the rework of constantly having to do it again and again and again. So then what should you actually prioritize in that first year? Well, year one isn't about optimization, it's actually about foundations. The goal is not and should not be to maximize your income. The goal is to learn safely, build judgment, reduce avoidable stress, and stay in the industry long enough that you can stabilize and start to build a career. Everything else is going to come later. So surviving the first year as a mortgage broker is not about hustling harder than everybody else, about earning quickly, about confidence on day one, and about doing everything yourself. Okay, the real lesson here is that the first year isn't something to win. It's something to get through intact, to actually survive. The new mortgage brokers who do survive it, though, they don't try and sprint. They build structure, they pace themselves, they protect their confidence, and once that first year is behind you, the job then changes. And that's when it starts to feel sustainable. And one of the biggest things that people get concerned about in this phase is money. The income can be all over the place. And so if you want to know how long it actually takes to earn money as a mortgage broker, check out this video on screen where I break it down right now.